Hello and welcome. I'm joined today by Dolfin's Head of Advisory, George Moscondi. George, hello, welcome.
Hello, Andrew.
It's the beginning of September and your team has just published its investment update for this month. As usual, can we begin with you giving us an overview of that?
Overall, we remain steadfast in our views. Again, monitoring the situations, particularly as we enter the latter months of the year. If we start off with rates, again, we're reasonably negative on rates, again, favouring perhaps the European markets. If we look at credit, high yield's been our preferred area over investment grade, and again, we're looking for short duration with quality issuances there. For equities, again, there's been a slight change in the sense that we've gone more from a sort of a positive to neutral stance, partly because of the strength that we've seen in the US market. But again, we do like the European markets on a relative basis there as well.
So let me pick up on what you were saying about equities. I think it's interesting. The post-financial crisis bull market that we've seen has just become the longest running in history, and the S&P in particular has done extremely well recently. What impact overall does that have on the investment landscape?
Well, again, it's quite interesting because in light of the backdrop, and what I mean by that is, for example, what we've seen in terms of trade disputes and obviously interest rates, and as well as the monetary policy that has been implemented as well. I think the most important thing is to look at the valuations, particularly for companies and stock prices. I think what you would expect is really for the economic cycle to run in parallel to give the support in order for those valuations to be justified. And we have seen a disparity between a lot of, for example, the US companies and the European markets, and it'll be interesting to see whether that relative, as I mentioned before, can be closed looking ahead for the rest of the year.
Let me ask you about the Eurozone CPI index data, the latest of which, of course, we're going to see this month. We know that the Bank of England pays very close attention to that in setting its own inflation target. How close do you think we're likely to get to that 2% that it set itself?
2% is a magical number, and then currently we're sitting at 2.5, and we saw a slight increase from the previous month. Again, looking at the components, the overall sort of contributors to that really were fuel and energy costs as well, which have been sort of partly been hit by the weak pound, but also by energy prices as well. I think with that sort of really been factored in as well, we do expect inflationary pressure to ease off over the coming months, and maybe that 2% target can be reached, but not in the foreseeable future.
Of course, we have a Fed meeting later on this month, and general market sentiment seems to be very heavily in favour of an interest rate rise, possibly another one in December. I wondered what your take on that was.
Well, I think it's likely to happen. I mean, just taking, for example, note from the Jackson Hole Economic Symposium, which was held last month, Jerome Powell gave a very sort of calm, delivered speech again. I think that went well, particularly with the markets, and I think that did sort of reinforce our view, and particularly the market's view, that there will be an interest rate hike, particularly in September.
So it's the beginning of September. You and I are back to work, as is the rest of the country, and of course the UK government is no exception. They go back this week also after the summer recess. I just wondered whether there was anything upcoming in the UK legislative agenda that you think is going to have an impact for investors.
Looking ahead, really, sort of the summer low is likely to continue. The only thing I can sort of pick out is a Chancellor of Exchequer answering questions on September the 11th, and I think that'll be quite telling, because I think that'll give an indication of the macro tone as we look towards the end of the year. But I certainly think Brexit will be another topical theme lurking in the background and being very highly discussed as well.
Brexit, of course, continues to loom large, and particularly in view of the EU summit coming up in October, and there's still no certainty as to whether or not we get a deal, and if so, what that deal will look like. What are we doing to protect against all that uncertainty for our investors in our portfolios?
One of the ideas we sort of picked up on a couple of months ago, and we've been working on in particular investments, it has been Brexit resilience, and we identified good quality companies which we feel will be not necessarily immune, but will actually do relatively well in the likelihood of a no deal. And typically with these companies, either food producers or beverage companies, we feel are worthy to have in the portfolios.
George, some fascinating ideas and insights there from you and your team. Thank you very much for joining us.
Thank you.
And thank you for joining us. Please visit our website to download your copy of our September investment update, and we look forward to seeing you again in the next video.